Hey everyone, welcome back to Corporate Decoder. Today F.L.O.C just filed an 8K after their annual meeting, and I'm seeing some interesting voting results that might tell us more about employee sentiment. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company approved a new employee stock purchase plan, and we've got the vote counts for director elections and auditor ratification right here. Alright, so Flowco Holdings Incorporated, or F.L.O.C, filed this report on May 7, 2026, detailing what happened at their annual stockholder meeting. The meeting happened on that same day. This is the company we are talking about, Flowco Holdings Incorporated. They are incorporated in Delaware, and their ticker symbol is F.L.O.C. They were incorporated a while back and have this commission file number. Their main office is in Houston, Texas. Now, what is listed and traded on the stock exchange for F.L.O.C is their Class A common stock. You can see it traded under the symbol F.L.O.C on the New York Stock Exchange. They also mention NYSE Texas Incorporated, which is likely a subsidiary or related exchange. Here is a little checkbox that tells us if they qualify as an emerging growth company. Yes, they do. This means they can take advantage of certain benefits and flexibilities for smaller companies under the law. They have elected not to use an extended transition period for new accounting standards though. The first major item here is about officer and director stuff, but importantly it breaks down the approval of the 2026 Employee Street Stock Purchase Plan, or ESPP. This plan allows the company to issue up to 500,000 shares of their common stock to employees. The details of this plan were already shared in their proxy statement back in March. It is basically a way for employees to buy company stock, often at a discount. This is the core of the filing today. It lays out what the stockholders voted on at the May 7th annual meeting. There were three main proposals. First up, the election of directors. They needed to elect 2 Class I directors to serve until the 2029 annual meeting. Let's look at the votes. Joseph R. Edwards got a huge number of votes for him, over 69 million. Cynthia L. Walker also got a massive number of votes for her, over 70 million against them. The numbers are quite low, and there were a good number of abstentions and broken non-votes, which are shares held by a broker that didn't receive specific instructions from the owner. Overall, both nominees were elected, which means the stockholders are happy with the current board leadership. Next, the big one, approving that employee stock purchase plan we just talked about. This proposal passed with an overwhelming majority. Look at this, over 75 million votes for the plan. Only a tiny fraction, just over 3,000 votes, were against it. This shows strong support from stockholders for giving employees a way to invest in the company. This kind of plan can really boost employee morale and make them feel more invested in the company's success. When employees own stock, they tend to work harder because they directly benefit from the company's stock price going up. Finally, they voted to ratify the appointment of PricewaterhouseCoopers LLP as their independent registered public accounting firm for the fiscal year ending the 31st of December 2026. And again, the vote was overwhelmingly in favor, with over 77 million votes for ratification. Not even 1,000 votes were against it. This tells us that the company's auditor has the confidence of the shareholders. It's standard practice, but it's good to see that everyone is on the same page about who is checking the company's books. In terms of exhibits, they've included the actual text of the 2026 Employee Street Stock Purchase Plan as Exhibit 10.1. And as always, they have the cover page interactive data file, which is basically a digital tag for all the important info. And here are the signatures confirming this report is official. It is signed by Joel Lambert, who is the Senior Vice President, Secretary, and General Counsel, and he signed it on May 8, 2026. The day after the meeting. Looking at the broader context, Flowco Holdings Inc. is in the energy sector, specifically oil and gas equipment and services. They have a market cap of around $2.8 billion and a P/E ratio of 21.4, which is fairly standard. They employ about 1,281 people. Recent news shows analysts are expecting a decline in earnings, but they also just went ex-dividend, meaning if you own the stock before that date, you'd get the dividend payment. They also recently shared a new investor presentation, and there has been discussion about how they are performing against other energy stocks. Their Q1 earnings call presentation was on May 9th, right after this meeting. Now, let's connect these voting results to the company's situation. The overwhelming approval of the employee stock purchase plan is a positive signal for employee engagement. Given that analysts are anticipating a dip in earnings, offering employees a stake in the company's future through stock ownership could be a strategic move to maintain morale and alignment during potentially tougher times. It is like saying, hey, we're all in this together, and here is a way for you to benefit when the company does well. This contrasts with companies that might cut employee benefits during downturns. In terms of the director elections and auditor ratification, the strong for votes indicate shareholder confidence in the current governance and financial oversight. This is always a good sign for stability. For a company facing potential earnings headwinds, having a stable board and trusted auditors can be crucial for navigating challenges and maintaining investor trust. What I found most interesting here isn't really any massive financial turnarounds or dramatic leadership changes, but rather the strong consensus on employee focused initiatives in an industry that can be volatile like oil and gas. Showing employees that they are valued and providing them with avenues for ownership can be a powerful retention and motivation tool. This employee stock purchase plan approval is a clear signal of that strategy. The risk I am watching is how the anticipated earnings decline will impact employee sentiment, even with the ESPP in place. If earnings drop significantly, it could put pressure on the stock price, making the ESPP less attractive in the short term if employees see their potential investment losing value. However, for long-term employees, it is still a chance to get in at a potentially lower price. My biggest concern is that if the overall market sentiment turns negative due to those earnings expectations, even strong internal votes like this might not be enough to offset external pressures on the stock. What I am actually looking for is to see how successful the company will be in conveying a positive long-term outlook during these earnings discussions, especially to its employees. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis valuable, like this video, subscribe for more, and join our Discord community linked in the description.